Catherine, even this morning, though, the Treasury Secretary sort of struggled to explain the end game of this tariff agenda. How much does the message ultimately matter here? Does it change the economics?
What matters here is what they actually do. We've heard a lot of mixed messaging from this administration, whether the tariffs are temporary as part of a negotiating ploy, which is a narrative that the Treasury Secretary seemed to endorse today, which, again, I think is why markets are rallying. Or are they permanent because we need the revenue, because they're part of Trump's grand plan to restructure global trade and bring manufacturing back into the United States? Now, I am dubious that any of those achievements that I just mentioned will actually happen as a result of keeping the tariffs permanent. But either way, they would be very devastating to the U.S. economy, to the global economy, to consumer living standards, et cetera. So the messaging needs to be a little more coherent, but ultimately what matters is finding an off-ramp to this needless global trade war.
And Justin, we've all been on the roller coaster the last few days watching Wall Street and reacting to the recent market turmoil. Here's what White House senior trade counselor Peter Navarro said on Fox last night.
It's going to be companies in the S&P 500 who are the first to produce here. Those are the ones going to lead the recovery. And it's going to happen. Dow 50,000, I guarantee that. And I guarantee no recession, okay?
Dow 50,000. We're not even at 40,000 today. No recession, he's guaranteeing. That's obviously the message the Trump administration wants out there. But this new CNBC survey of CEOs found 69% expect a recession. Justin, I have to put you on the spot because after the pandemic, you were right on when you kept saying the U.S. was not headed for a recession. Where do you stand right now?
It's hard, but let me give you actually two forecasts. If Trump backs down, throws it all away, says I made a mistake, let's move on, we're going to do coherent economic policy, there's been a little bit of damage, and I think there's only a 25% chance of a recession this year. If he keeps on the current path, we're all the way up to a 75% chance, and most of my economist friends tell me that's me being optimistic. If he'd done nothing at all, this normally in a typical year there's a 12 or 13% chance of a recession. This year is actually a wonderful year for doing business. There's not much chaos around the world. It should have been 10%. It's definitely 25%. If he stays the course, we're up to 75%.
So is there a door number 3 here, though, if he keeps giving mixed messages and everyone is in this permanent wait-and-see uncertainty mode, then what?
Well, I can tell you about my family. We're thinking about buying a second car, but with the tariffs, car prices are way up. Now, I don't reckon he's going to stay the course, so why would I pay a lot of money for a car right now? So I'm going to wait a few months to see whether he backs off. Well, that's what I'm doing. I reckon there's a lot of other families doing the same thing. Talk to any CEO across the country and they're telling you the same thing. If their staff brings you expansion plans, a new factory, something like that, the level of uncertainty, not just about trade, but about the entire Trump agenda is so high that for them, surely the best answer is, let me put this in the drawer for a couple of months and see how things shake out. If everyone does that at the same time, that causes spending to plummet, and that's the thing that starts the recession.
Brian, these claims that there are dozens of countries trying to negotiate with the White House right now. Here was the Treasury Secretary this morning on CNBC.
My advice on April 2nd to our trading partners was not to panic, don't escalate, and then we will see where President Trump is after a period of days or weeks. I think you are going to see some very large countries with large trade deficits come forward very quickly. I think we can, if they come to the table with solid proposals, I think we can end up with some good deals.
Brian, do we know what kind of concessions the White House is wanting?
Well, it's more than just lowering their tariff rates. And we heard it from Peter Navarro, again, the trade advisor to President Trump yesterday when he spoke on another network and offered the theory where he said even if a country like Vietnam were to offer a 0% tariff rate on U.S. goods that are imported into Vietnam, that wouldn't be enough. He wants things like concessions on intellectual property, some sort of explicit promise from countries like Vietnam and maybe other Southeast Asian countries as well that they won't allow China to export products through those Southeast Asian countries to avoid a higher tariff. it's a little bit unclear about how they would do that. I want to point out here, though, when we talk about the tariffs and the language around this, right, or especially around the word reciprocal, it wasn't ever really about the tariff rates that other countries charge on the United States as well, because when you unpack and you look at the actual formula for how the White House calculated their so-called reciprocal tariffs, there is nothing in that equation that accounts for the actual tariff rate that another country charges. All it is essentially is the trade deficit. It accounts singularly for what is the difference between the amount that another country brings in from the United States and how much they send to the U.S. So, that equation and the framing of all this as, oh, it's a reciprocal tariff, we are tariffing back on another country half of what they charge us, that's just outright false. And I think even the label of reciprocal it needs to be rethought here. But it's not just about the tariff rate, it's about other concessions like intellectual property, like the way that they interact with the Chinese government and the Chinese economy. Those are all very complicated things to try and negotiate bilaterally with each of the countries that we might now ratchet up rates on.
Yeah, and Justin, speaking of China, that is a country that doesn't appear to be looking for a deal right now. They have threatened to, quote, fight till the end. If neither side backs down here, we're talking 104% tariffs from the U.S. on Chinese goods and likely vice versa. What is the fallout of that? Detail what that looks like for the American consumer and American jobs.
Well, so much of what we buy, I looked at my kids' toys last night. So many of them were made in China. I looked at the clothes that I wear. So many of them are made in China. You might say, why don't you buy American, Justin? They almost don't make it in America. You might say, well, why don't we onshore it to America, Justin? But we don't want those jobs. Do you really want your kids growing up to be stitching in a sweatshop? Do you want them working in a plastics factory? So that's the big thing. We're basically going to be completely cut off from China. Your iPhone, it's currently built in China. So two things are going to happen there. Either the price of the iPhone will rise dramatically, by some estimates over $2,000, or we saw Apple already figure out the smartest way to get around these tariffs. It's not to bring production to America. They're going to start producing more in India instead. Doesn't help Americans, raises the price of the phone, hurts China, helps India. I don't know how it's helping any of us.
You make some really, really good points, and I think we're all just trying to make sense of what it means for our families. Catherine, we're about to hear from the U.S. Trade Representative Jamieson Greer, and that's going to happen in just minutes. We're seeing the heads of the Finance Committee deliver their opening statements. Of course, we will bring any highlights to our viewers once that really gets going, but we do know that Greer is expected to say that the tariffs are already bearing fruit. What questions does Greer need to answer?
Well, a number of things. So as you just heard from Brian, if we are actually trying to get concessions from other countries along the lines of protecting our intellectual property rights or not doing deals with China, we had a deal like this negotiated under one of Greer's predecessors, Michael Froman, under former President Obama, called the Trans-Pacific Partnership, that was a multilateral trade agreement that did all of those things, essentially. And Trump tore it up very early in his first term. So one question is this really the best strategy for achieving any of the objectives we have heard the Trump administration mention they want to achieve, particularly reining in China, opening up markets to U.S. exporters, et cetera? Another one would be, how did they come up with this nonsense formula that Brian mentioned earlier for the quote-unquote reciprocal tariffs, which, again, that's a propaganda term. This has nothing to do with reciprocity. It's an arbitrary formula that was chosen that basically divides the trade deficit by the number of imports from that other country. Has nothing to do with trade barriers. We import a lot of vanilla from Madagascar because that's where the vanilla is grown. We import coffee from lots of countries that have sort of more jungle-like climates because that's where coffee is grown. Has nothing to do with trade barriers. So one question is, where did this formula come from? Because right now I am hearing from members of this administration that no one wants to take credit or blame, rather, for it once it was pointed out what an embarrassment it was.
Catherine Rampell, Brian Cheung, Justin Wolfers, thank you all so much for joining us, helping us make sense of how this is unfolding.